All right, let's get right into it. There's this huge debate shaking up the crypto world, and it really boils down to one fundamental question. What actually gives a digital asset its value? Is it its history, or is it what it can do in the real world?
I mean, for as long as most of us have been paying attention, there's been one king of the hill, right? Bitcoin. It's the original, the one that kicked this whole thing off and proved that blockchain was even possible.
But here's a provocative thought from the material we're looking at today. What if that whole reign is built on an idea that's, well, getting a little old? You have to ask, in a world where tech gets better every single day, is being first enough to stay on top forever? Because there's a new word that's starting to take over the entire conversation: utility. The argument here is that the market is making a massive shift. We're moving past pure speculation and starting to demand real-world usefulness. Assets that actually solve problems for real businesses.
So let's really dig into this first part, the riddle of Bitcoin's value. Why is the king's throne maybe starting to feel a little wobbly? It's this crazy paradox of having immense value, but according to our source, maybe not as much practical application as you'd think.
I mean, just look at this number. At one point, Bitcoin's market cap hit $1.8 trillion. That is just a staggering figure. It's an incredible success story as an investment and as a store of value, no doubt about it.
But this quote really gets to the heart of the paradox. The argument is that it got to that incredible market cap with almost no real-world use. Sure, you can send and receive it, but did it really get integrated deep into the financial systems it was supposed to change? The source here says, not so much.
And this is where the tech comes in. Think of it like this. Bitcoin was the first car ever built. Absolutely revolutionary. But today, we have modern alternatives that are just way faster, way cheaper, and way more efficient. So the question becomes, why keep using the Model T when a Tesla is available?
But okay, this isn't just about the technology itself. The entire environment around crypto is changing. The actual rules of the game are being rewritten as we speak.
You see, for crypto to really make that leap into the mainstream, to become the backbone of finance, the big players like institutions and major corporations need clear rules. They just can't operate in a Wild West environment. For them, uncertainty is the absolute enemy of adoption.
And this isn't some far-off idea. It's happening right now. You've got a real legislative push to create a clear market structure for digital assets. It's a sign that the big players are being heard. And here's the thing savvy investors know. The markets don't wait around for the final laws to be signed. They often move before that final clarity arrives.
And all this leads to some pretty bold predictions. You have analysts like Stephen McClurg, the CEO of Canary Capital, coming right out and saying it, utility coins will do better than Bitcoin. The thinking is, as the rules get clearer, the money is going to flow towards assets that have real-world applications.
This idea even has a name, capital rotation, and it's really central to this whole argument. The money doesn't just disappear from the crypto market, it moves. It rotates from one type of asset to another, seeking out growth, efficiency, and, in this new era, actual use cases.
So, if the market is really shifting towards utility, who's actually ready to meet that demand? Well, the source we're looking at today puts a major spotlight on XRP, calling it a challenger designed specifically for this new era.
And when you look at the specs, you can see why. It was basically built from the ground up for business. Transactions settle in just a few seconds. They cost a tiny fraction of a penny. It's purpose-built for the very things banks and institutions are exploring right now, like payments and tokenization. Plus, it's been around since 2012, hanging out in the top 10. That shows some serious resilience.
But here's the really critical distinction, the thing that sets it apart. In a market that is absolutely starving for regulatory certainty, XRP has already gained a huge amount of legal clarity here in the US. And that is a very big deal because it dramatically lowers the risk for those big institutional investors.
This statement really underscores that competitive advantage. While so many other projects are still stuck in a regulatory gray area, having a US court basically say you're a non-security digital asset, Well, that's the kind of clarity institutions absolutely crave.
And look, this isn't just one person's opinion. The source points out that we're starting to hear a whole chorus of industry leaders, and they're all singing a very similar song.
Ripple CEO Brad Garlinghouse puts it pretty bluntly. He says the next step for crypto is actually using it. It's time to say goodbye to the era when the market was based purely on speculation. It's a real change in focus from short-term hype to long-term application.
And you hear that same theme echoed by others. Like the CEO of Evernorth, he sees institutional DeFi, decentralized finance, really taking off soon. And guess what he says it'll be built on? 4 things: clarity, speed, compliance, and usefulness. It all points in the exact same direction.
Now, it's important to understand, the argument isn't about some sudden flippening, where you wake up one morning and there's a new #1 crypto. It's more like a fundamental market split, a decoupling where the performance of assets with utility is no longer tied at the hip to Bitcoin's price.
And that presents a really fascinating future, doesn't it? Imagine a crypto market where assets driven by real-world adoption are seeing steady growth, even while the more speculative side of the market is down. That would be a fundamental change in how this whole space works.
So really, the core idea here is that the crypto market is simply maturing. It's growing up, it's evolving from a speculative playground into the potential foundation for a new global financial infrastructure.
This, right here, really captures the endgame. The pipes of the global financial system are being rewired as we speak. And at the end of the day, the winner isn't necessarily the one who was first. The winner is the technology that actually gets integrated into those new pipes.
Which leaves us with this final, provocative thought. As this whole world continues to mature, where is the value going to come from? Will it follow its past, its history, or will it follow its purpose? That is the great debate, and what happens next is anyone's guess.